and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the Dhanteras special edition. Remember, commodity markets have lit up bright right ahead of the festive season. Gold prices have hit all-time high levels in both gold, global as well as the Indian markets. We've seen even silver, which has outperformed the metals in 2024. There are various factors which are at play: fiscal instability, de-dollarization, geopolitical tensions, safe haven appeal, and all of this put together along with the festive demand has now led to a sharp rally in these precious metals. Now, if you have already gone big on gold and silver this year, you must be laughing your way to the bank. But if you're someone who's going through a fear of missing out on the glittering opportunity, then we will help you analyze what is the current situation on gold and silver, how are top experts decoding whether it makes really sense to invest in these precious metals at these sky high prices, what is the outlook and the returns that you can expect over the next Samvat. Let me welcome for you our star panel today. We have Mr. Rahul Arora, the CEO of Nirmal Bang Institutional Equities, joining right in. We also have with us Mr. Sachin Jain. He is the regional CEO of India at the World Gold Council. And we are also joined by Ajay Kedia. He is the MD and the Director at Kedia Advisory. Warm welcome to all of you. And thank you so much for taking the time out. I wish you all a very happy Dhanteras. And may Goddess Lakshmi bless you all along with your teams and your loved ones with prosperity and success this festive season. Let me kickstart this discussion with you, Rahul. And I want to understand from you, your gold has experienced remarkable rally in 2024, generating 24% returns, outperforming equities. Since last Dhanteras, it's up over 30%. So did you also allocate a big chunk of your clients' money in gold, or are you still regretting not having allocated enough?
First off, Sakshi, thank you so much for having me on the show, and wish you and your family and your colleagues a very happy Dhanteras, Diwali, and the entire festive. So I think, Sakshi, the way we look at it is from an asset allocation standpoint. I would still say that at any point in time, for people that are under the age group of 50, you should probably have about 75-80% exposure to equity. The balance 20-25% can be allocated between real estate, fixed deposit, gold, etc. So I think, when you look at our own house call, we're expecting another 10-12% upside in gold. That's about, as far as the current projections go at about 31, 3200 or thereabouts. But yeah, I mean, it's been a good year. It's been a good year across the board. And I think it's not just a good year. I think it's been a remarkable 4 years since the lows that we saw in COVID across asset classes. So, we've seen a bit of a temporary setback in some of the asset classes, but nothing to suggest that any sort of how should I say, not enough to dampen the mood. Let me put it that way. And I think things are still all right. I think I wouldn't change the way I view asset allocation. Maybe about 10%, 8 to 10% in gold for about 10-12% over the next year. Probably not a bad strategy.
Okay, let's get in Mr. Jain also into the conversation now. Mr. Jain, you've been analyzing gold and the way it has been moving very, very closely at the World Gold Council. Do tell us what are the top 2 or 3 factors you believe will continue to impact the gold prices over the next summer? Do you think this one-way upward trajectory will continue, or will there be some softening, giving a breather to all of those investors who've been panting looking at the kind of prices that we've been seeing of gold?
Thank you, Sakshi. Thanks for getting me on your panel. And at the outset, warm wishes for a very happy Dhanteras.
Thank
Lots of
you.
abundance, lots of joy to your audience, to your viewers. And as you said, and as Rahul was mentioning, we've been seeing this upward trajectory for way too long.
Yeah.
A lot of factors playing on that, global level, Indian level. I'm sure the opening remarks around geopolitics, around de-dollarizations, those stay up. But what's also happened is that particularly the financial markets, particularly the global ETFs, Western market ETFs, which were in cashing in the first 2 quarters, the calendar year, Jan to March and then April to June, have now been back in the market on the last quarter. There have been a lot of inflows that have happened and the AUMs are going up. That's one of the important factors to consider. And that's purely to do with how gold has actually given the returns. So that's one area. If you look at India from a jewelry standpoint and the consumption standpoint, post the 22nd of July, when the respectable finance minister on one sentence changed a lot of things for the future of the consumption, we've seen a very strong August with those prices. We've seen last 20 days where the prices crossed 80,000, that there was a bit of slowdown. But the trend on floor, particularly for jewelry and consumption, and I would say bars and coins, have been very strong. It's going to be a very historic time. And we think that the consumption from that perspective, jewelry, investment bar and coin, and the financial market continues. Now, if you look at one of the key elements of geopolitics, that we don't think that that's going to completely calm down, or that's going to be completely static for some time. So that's one important consideration. And the central banks globally have been on a very rampant buying for the first 6 months of the year. Last quarter was slightly slow, but
Yeah.
for Reserve Bank of India, Bank of Poland, Turkey, they've been very important buyers that continue. And actually, if you look at, when we talk about the valuation of gold, and I'm sure even for our central banks, particularly Reserve Bank of India, the
Hmm.
valuation is at 800, around 830, 840 tons today. The
Hmm.
valuation of asset sits, very many years back to today would have been a great upside.
Hmm. Hmm.
So with
Okay.
that, the overall sentiment we think is really strong for gold. And
Hmm.
the only element I like to end my bit would be that you should look at gold from a long-term perspective. Its arguments like diversification of a portfolio have stood. Arguments of gold as a safe haven have stood very strong. And the current perspective, we think the factors around gold are very strong.
Okay, getting Mr. Kedia also into the conversation now. Mr. Kedia, you've been looking at every rupee that has moved on gold and silver all through this year. I've done numerous shows with you to analyze what could be the Diwali and the year-end targets. Tell me, have gold and silver prices even surpassed your own target expectations that you had till Dhanteras and Diwali? And what are you expecting now? Will this sky-high giddy prices continue this year?
Yeah, first of all, happy Dhanteras to Shakshi and all panelists and your viewer.
Thank you
And
so much.
Shakshi, the background you are getting, it seems like God Lakshmi is sitting in front of us and gold is just soaring what we have seen in 2024. And frankly, last year when the prices was around 1850, 1860, we were expecting $2,400
Yes.
for year 2024, and exactly we have matched that target, and now right now we are sitting near to $2,700.
Hmm.
Still I think steam is being left in gold. We may test 3000, 3100 level with a given interest rate. Global central banks are cutting down the interest. Important would be the ETF inflow, as
Hmm.
rightly Mr. Jain has told that investment is now getting pulled up from financial market to slowly and steady, as Rahul has already pushed on that. Slowly and steady, the investment is diversifying for gold. But I think 2025 is going to be a very wild period, we can say, for gold and silver both, because no new story is been coming up. But despite that, we are expecting 85,000 for gold can be easily achievable conservatively. Whereas on higher side in international 3,000, 3,050. But second half is going to be little bit profit taking, because the geopolitical tension has been discounted, central bank buying or BRICS currency would be there. It's all terms have been on talk only. So I think still there is a steam towards 3,000 or 85,000 level mark can be seen. But I'm more bullish on silver with the looking of gold silver ratio, which is currently around 81. But gold, I think 85,000 and 3,000 should be, we should get on first half of 2025.
Okay, first half of 2025, that's the kind of expectation on both gold and silver. Coming back to you, Rahul, you did say 8 to 10% of the allocation is apt for a retail investor also when one really looks at gold. What is the right form that you're advising clients to really take an entry? We are seeing less of sovereign gold bonds now from the government. They would probably be wiped out because it's really taking a toll on the exchequer with the way it is. The only form in which SGBs are available now are in the secondary markets for trading. What is the next best option right there available for retail investors at large to have that gold pie into their portfolios today?
So, Takshi, I wouldn't classify myself as an expert on the subject, but I think, the core speciality would always remain equities. But I think, the way, I mean, ETFs is not a bad way to go. I think, there are so many of these that are out there right now. I think if you're not somebody, so like we tell, equity investors, if you're not, if you don't have the time and effort to go out and, analyze balance sheets and P&L statements,
Yeah.
then you actually go through the mutual fund route. Similarly, I think here, if you don't understand, the nuances of buying and selling gold, at the drop of a hat, or it's not something that you do for a living, I think ETFs is actually not a bad option. Now, to your question on what could be a good price to enter, I think, like I said, I think, our commodities head believes that 31, 3,200 could be a reasonable target. But I think, if you do get a correction of about 8, 10%, and then you're playing for 20%, I think that's a remarkable sort of trade to be taking in any asset class. So I think I would, you could put it, see, even with a 10% gain, Sakshi, you're beating fixed deposits, right? I think FD returns today are what, like 6.5%, 7%, and they're taxed at marginal tax rate. So you're effectively making what, 4.5%, 5% on fixed deposits. So I think any asset class that's giving you more than that, and I think, gold has a good chance of giving you more than 2x those returns. I think even currently you could look at making an investment, but obviously 8-10% cheaper makes it a much, much better bet.
Okay, so would you advise gold stocks at all right now? Maybe jewelry stocks directly, or the gold financiers? How are you looking at them? At least some of the gold related stocks, jewelry stocks specifically, have outperformed in the recent past too.
Yeah, so we've been very bullish on Muthoot. We love that company. It's about 18-19% return on equity company, about 4% return on assets. Titan, I don't think it knows what it is to slow down the business. I think both Titan and Trent have done remarkably well, but Titan has done exceptionally well. And you've had a lot of gold companies list over the last 5 years. You've had TVZ, you've had Senco, Kalyan Jewelers. A lot of these guys have come into the market. So there is option for retail investors to actually play this indirectly through gold stocks. So I think if there are two stocks that I would probably recommend that had something to do with gold, it would probably be Titan and Muthoot, even at these prices.
Okay, direct stocks, jewelry stocks, in case you can look at it's Titan and Muthoot right there. Recommendations coming in from Mr. Arora. Let me get back to Mr. Jain now. Help us understand what is the current sentiment. We are seeing these sky-high prices of gold in the domestic market in India right now. Festive season is at peak, and this will be followed by the wedding season as well. Do you think these sky-high prices have dampened the sentiment? Are there lesser footfalls this time around because of these sky-high prices? How is the demand on what is the kind of volume that we are expecting this festive season vis-a-vis last year?
So, Sakshi, what we've seen is that, historically, whenever the prices of gold go up, consumers tend to stay or stall back. And once they're settled and they know this is the level where it's going to be, then consumers come back and transact. We've seen this happen throughout 2024. August, when the custom duty correction was or the change was happened by the respectable finance minister, August we saw a big surge in gold consumption, almost a preponement of this festive buying or even the wedding buying that you just mentioned of, that we saw large or heavy pieces of gold at the retail getting consumed. When the gold prices crossed to 80,000, which was about 17 days back, there's a lot of apprehension that we all as industry had, where consumers would come in and perhaps not transact. Now, last 10 days I've been on the floor and covering all retail markets, and I can completely confirm that there is a lot of excitement. Consumers have come in on the floors, and I believe that today will be a very strong day. If you track back, also there's a trend where consumers come and book their gold and their pieces to be picked up on Dhanteras. Those levels have been fairly decent as well. And lastly, on the jewelry side of it, the industry believes that they had Diwali number 1 in August, and this is actually Diwali number 2. So we need to keep in mind that the same consumer is going to come back. And hence, even if those very massive numbers, we should see it from a tandem of what's happened in 2 months. And from that perspective, I can confirm that the excitement is very strong. And the fact that both what Rahul and Mr. Kedia mentioned about the returns, those have been felt by an avid consumer. And just one more point I'd like to add on what Rahul mentioned around ETF. Now, the awareness of ETF, and we as a country love physical gold. It's a part. And I think once the awareness of what a gold ETF is, and every gram of gold that you buy on ETF is backed by physical gold, which you don't have to worry that just the simplicity of that product is going to make a lot of consumers, inclined towards a very easy form of investment. And I think the future of ETF will be very strong.
Okay, the future of ETF is going to be really strong and sharp. Let's get in Mr. Kedia right here. So, Mr. Kedia, you do expect that silver is likely to outperform from here on as well between the two precious metals. But on the point that Rahul mentioned that even now we can go and make that investment perhaps an 8-10% lower if we get, we'll be lucky and we'll get the best prices right there. But are those prices likely to come? Are we going to get the benefit of lower prices if at all? Will there be some kind of an opportunity, or is it going to keep going up? I think the biggest question that investors want to know right now is, should I put in the money now or should I wait? That's the biggest question.
See, Sakshi, I think particularly for silver, silver is in different league only because see 10 years back when the prices was moved towards 75,000, everybody was talking about 1 lakh, 1 lakh. But we
Yeah.
know at that time the consumption was very low. But now things have been totally changed because we have seen clean energy and photovoltaic demand. Everything has been totally changed in last 10 years. And no doubt in last 5 years, silver was not at all performing because it totally tracked the economy. And we know China is making every effort, but till date, we have not got a very good consumption from China. So I think things have been totally changed for silver. And secondly, the financial players are now eyeing on gold and silver. See, we used to say mutual fund is subject to market risk, and people were avoiding mutual fund. But in 2012-13, there was a slogan, mutual fund sahi hai, and today we see 25,000 crore SIP has been coming. So similarly, previously we used to buy and consume gold and silver on a ritual or sentimental buying was there. But now people are now understand we can buy as a financial product also. We can book profit. Gold and silver consistently giving a double-digit return. So I think the scope in last 5 years has been totally changed. So overall, I think financially silver is in different league, and we are expecting by next 3 years silver might double from here because industrial consumption is totally a new thing. Clean energy is totally new thing. So investment and industrial consumption will definitely add silver on higher side. And as I have already mentioned, gold silver ratio historically in last 50 years, gold silver ratio moved in a range of 30 to 90. Only during the COVID we have seen this ratio move towards 128 level, but now it's hardly at 80 81 zone. If we take an average of let's say 70 72, then also there is a high probability that silver can give better return as compared to gold. Even we tell uh, silver as a postman gold. So I think silver have a great potential as compared to gold from here.
Okay, got it. So silver could outperform. Coming back to you, Rahul now. Rahul, over the next Samvat now, this Samvat we already have seen that gold has outperformed equities, which is your favorite asset class. Tell us going forward over the next Samvat, are equities going to make it equal?
It's a tough call. I think, if you look at the last, if we, let's say we were having this conversation in 2019, 5 years back, I mean, what all has been thrown at the market? You had a global pandemic, you had two wars, possibly a third on the horizon. You had remarkably high interest rates in the United States, very high rates in India. The kind of mortgage rates that you saw in the US, you've never seen, not in my lifetime at least, or it would have been around Paul Volcker's time. All
Yeah.
of this has been thrown at the market, but the market has not corrected. I mean, long-term capital gains tax was hiked. The incumbent that was expected to get a majority in the Lok Sabha elections did not get that. So much was thrown at the market, but it just did not correct, and it just kept moving up. So I think what you've seen over the last few days is a very welcome correction, and I think across asset classes, it would be nice to take a little bit of a pause. That's not to say that anything is structurally changing in the India story across asset classes at this point, least of all equities. But I think, Sakshi, it's best to enter this Diwali season with a
Mm-hmm.
slightly tempered outlook. See, nothing in
Okay.
life is linear, right? A 7,500 Nifty became 26,500. You had almost a 3.5, 4x rise in the index in about 4 years. So I think over the next 1 year, if you are able to get a 10 to 15% on most asset classes, including equities at a headline level, I think people should take that and be happy with it, because I just don't think you can keep going up the way we have, because valuations had become excessive in most parts of the market. And like I said, I think this is a welcome pause. And this is probably likely, it would be nice to see this in real estate as well. I think, when we talk to a lot of people in the real estate community, and we haven't discussed that, I mean, it's becoming almost impossible to buy a 2
Yes.
BHK or a 3
Yes.
BHK
Oh,
in
yes.
markets like Delhi and Bombay. And you don't want to reach a stage where that K-shaped recovery that people keep talking about, only the rich getting richer and buying those asset classes. So I think this is a good time to probably reflect, probably take a pause. It's already started in equities. I hope it comes into some of the other asset classes. But I think if we have measured and tempered expectations of about 10-15% over the next 1 year, our scope for disappointment is very
Okay, temper your expectations. 10-15% of an upside is what we get, and you're right over there. When we talk about real estate, I think the only houses that are getting built are upwards of 100 crores, and that is the kind of demand that most of the realtors are getting here in at least Delhi NCR. Who's buying all of those houses between the all three of you? I think you have to tell us the names right here on the show. Who exactly is the big purchasers? Let's get Mr. Jain also into the conversation. Tell us, do you think the outperformance of gold to continue over the next Samvat, sir?
Well, we at World Gold Council don't project pricing, but if you look at the various factors that impact the gold movement and the pricing, those are conducive for gold. And our only recommendation will also be always been that look at gold from a long-term perspective. Look at it as a healthy diversifier. And certainly I would agree to Rahul that the responses, the returns that we've seen historically in the last some time might not be standard, and we shouldn't sort of bet that every asset class is going to grow in that same sort of level up. But if they're with realistic expectations, I think gold will be a very good performer. The pillars on which this whole pricing is built continue to be strong, and not all rightly. I mean, the fact is, this is geopolitics, and geopolitics is not in a good place. Would we want the world to be a more peaceful place? Certainly, yes. Will it happen? Perhaps not in the short term. And hence, look at long term, and from a long term perspective, it's a great asset class to be in.
Do you also see at these sky high prices a lot of gold exchange taking place? Are people also booking out their returns as well at these levels? Mr.
Actually, surprisingly, Sakshi, we do a lot of survey on recycling of gold, a lot of recycling happens from tier 5, tier 6 cities, also rural India, which we've not seen people come in cash. We've seen people come in exchange, people, getting to more contemporary designs. And if you were to say that if there was upward trajectory, the first response is that people take cash. And we've not seen that. And that reflects about the confidence that people have on the physical gold that they're holding.
Okay, I'll come to Mr. Kedia for the last word, but before wrapping up, I want to ask Rahul also that you do say that while one has to temper the expectations on the benchmark level, where is it that one can continue to build alpha over the next Samvat? Where is it that you find still after this recent run up a pocket of value getting emerged? Any outperformance within sectors or stocks that you expect?
So I think Sakshi, the sort of consensus view is that BFSI, banking and financial services, are where value is there. Yes, growth has been a bit of a challenge, NPAs in some cases, net interest margins, but I think on a relative basis, it looks like the most attractive sector to us at this point. I think what's been very resilient, Sakshi, has been IT services. I think the one call everyone in the world, including us, have got wrong is that people have been predicting a US recession for 2 years. It hasn't come. And I think IT services as a sector has done really well in that backdrop. I think that could be another interesting pocket, so to speak. Apart from that, I think, Sakshi, typically in a year where you have general elections, construction activity slows down a bit running up to elections. So if that picks up in a material way, then I think a second order beneficiary could be cement. I think some value is emerging there. So I think financial services, IT, and to some extent cement and specialty chemicals. I think these are 3-4 places where I think on a case-to-case basis, some value is certainly emerging. But I think there are still pockets of the market where valuations need to reset. But like I said a few moments back, Sakshi, I think this correction is a welcome one. We should take it in our stride and use it to build positions. Hopefully when we're talking next Diwali, even if the index is up 10-15%, if stocks are up 40-50% and we've made the right call, we'll be looking at a fairly good 2025 in retrospect as well.
Okay, wonderful. Coming back to Mr. Kedia now, 1 lakh on silver is what we've already seen. How soon are we going to see 1 lakh on gold now? Is it going to be over the next Samvat? I hope not.
See, rising gold will be definitely everyone will be looking, but I think already the rally has been too fast. We can say in last couple of years. I am too definitely seems to be very bullish on gold. Maybe as of now, conservative target would be 85, but things in 2025 is going to be totally different. Maybe on higher side 88, but testing 1 lakh may take another couple of years, because right now, last 3 years, whatever the factors like geopolitical tension still going on, central bank buying, and everything has been already discounted. Unless until new thing doesn't come, I think already a $1,000 rally has already been seen. So slightly in 2025, I think prices is going to be on higher side, but a correction is required to go further towards 1 lakh rupees on domestic side also. We have already seen when the prices, because of duty adjustment, has dropped, immediately buying has re-emerged. I think next 2 years or 2.5 years should be the projection for 1 lakh rupees. Timing in 2025, I am bullish, but for first half, second half, there should be a consolidation, there should be some correction, then only this rally would be a sustainable rally.
Okay, Mr. Jain, do you think this 80,000 rupees is a normal on gold now, and a 1 lakh rupees is something that you should get used to on silver too? Or is there
I
going to
think
be some room for a correction?
yeah, we'll see. We'll have to watch out, Sakshi, as to where it goes. But I think, as I said before, it doesn't look like it's going to go down. The overall pillars on which gold price is constructed and where it moves are fairly strong in favor of gold. So whether it's the normal, whether we should take that as a standpoint, I wouldn't comment on that. But the overall environment around gold seems very strong.
Okay, gold and silver may continue to shine brighter, and so are the equities, although tempered expectations right there. But you should definitely hope to see some below the surface outperformance that could come in 2025 as well. Well, gentlemen, thank you so much for being with us on this very special Dhanteras edition on our channel. We hope that this year turns out to be a bright and fantastic one for each one of you. Thank you so much. Truly appreciate your time with us.
Thank you very
Thank
much.
you.
Thank you, Sakshi.
All right, viewers, we will wrap it up at that on Dhanteras edition on Business Today Television. So stay tuned. Throughout the course of the day, we will be getting you fantastic coverage on festivities. Top market masters will be joining in and to discuss with you what should your portfolio construct be like in case you're looking to construct afresh. This could be perhaps the best time. You've got that correction that was not coming in, and perhaps this is where you should be really looking at to create a portfolio for the long term as well, including all the asset classes. One of the asset classes is something that we've just discussed. We'll be discussing equities more deeply in the next edition that will come up at 2 p.m. So stay tuned for that too.
Dharmesh ji, one very quick view on banking results. PNB, blowout performance. Bank of Baroda, fabulous performance. ICICI Bank, super fantastic. How do you see these three numbers that have come against the backdrop of huge disappointments in second quarter earnings? What is your view on private and public sector banks?
Chandra, that's the beauty of the public sector banks.